In the 1930s, Saudi Arabia was so poor that its founder, King Abdulaziz, sometimes paid his soldiers with dates. No skyscrapers, no sovereign wealth fund, no trillion-dollar headlines, just desert, heat, and a kingdom stitched together by tribal alliances. Fast forward less than a century, and Saudi Arabia is one of the richest countries on earth. It controls a resource that can shake global markets in minutes. It funds megacities in the sand. It buys football clubs, tech stakes, and entire chunks of the future. So how did a place with almost no natural water, almost no farmland, and almost no industry become an economic superpower? The short answer is oil. The real answer is much more complicated, and right now it matters more than ever, because the same system that made Saudi Arabia rich is the system the world is trying to escape. Let's rewind. In 1938, American geologists struck oil at Dammam Well No. 7. It wasn't just oil, it was one of the largest reserves ever discovered. The concession was controlled by an American company that would later become part of Aramco. At first, production was modest. Then World War II ended. The global economy roared back to life. Cars multiplied, airplanes filled the skies, factories ran day and night. Oil wasn't just fuel, it was growth, and Saudi Arabia was sitting on oceans of it. By the 1950s and 60s, production surged, revenues exploded. The kingdom negotiated better terms with foreign oil companies. Eventually, it nationalized the industry, forming what is now Saudi Aramco. Here's the first key mechanism: oil is valuable. But cheap oil that is easy to extract is a superpower. Saudi oil is among the cheapest in the world to produce. In some fields, it costs just a few dollars per barrel to pump out of the ground. That means when global prices rise to $70, $80, $100 a barrel, the profit margins are enormous. Now multiply that by millions of barrels per day. Saudi Arabia isn't just an oil producer. It's one of the largest exporters on earth. That means it doesn't consume most of what it produces. It sells it for dollars. And this is where geopolitics enters the story. In the 1970s, after the oil shocks and embargoes, something critical happened. Oil began to be priced almost exclusively in US dollars. This created what economists call the petrodollar system. If you want oil, you need dollars. If you need dollars, you hold dollars, and Saudi Arabia became a central pillar of that system. Oil revenues flooded into the kingdom. High prices in the 1970s generated massive surpluses. The government built roads, ports, airports, universities, hospitals. Entire cities expanded almost overnight. But here's the part that's less visible. Saudi Arabia didn't just spend the money, it recycled it. Oil dollars were invested back into global financial markets, especially US Treasury bonds. This strengthened ties with Washington and helped stabilize the dollar-based system that oil depended on. It was a loop: sell oil for dollars, invest dollars in dollar assets, help keep the system stable, sell more oil. For decades, this worked astonishingly well. The kingdom built one of the most generous welfare states in the world. Citizens paid little to no income tax. The government funded public sector jobs, subsidies, housing support. In exchange, political power remained tightly centralized. No elections, no noisy political competition. Just a social contract: prosperity for stability. And as long as oil prices stayed high, the math worked. But oil prices don't move in straight lines. In the 1980s, prices collapsed, revenues plunged, Saudi Arabia faced deficits. The illusion of endless cash cracked. Still, the reserves were so vast that the country remained wealthy. It could borrow, it could cut spending, it could wait. Then came the 2000s, China's industrial rise sent commodity prices soaring. Oil surged past $100 a barrel. Once again, money flooded in, foreign reserves ballooned, mega projects multiplied, luxury towers climbed into the Riyadh skyline. But something else was happening quietly. The population was growing fast. In the 1970s, Saudi Arabia had around 6 million people. Today, it has more than 35 million, a young population. A population that needs jobs. Oil production, however, doesn't scale the same way people do. It's capital intensive, not labor intensive. You don't need millions of workers to pump oil. You need technology and wells that creates a structural tension. Oil makes the country rich, but oil doesn't employ most of the country. So the government became the employer. Public sector salaries expanded. State-backed companies grew. Expat workers filled private sector roles. The economy became heavily dependent on state spending. Fueled by oil revenue, this is the core mechanism of Saudi wealth. It's not just that the country has oil, it's that oil revenue flows directly into the state and the state redistributes it across the economy. When oil prices are high, growth feels effortless. When oil prices fall, everything tightens. Now fast forward to the 2010s, two uncomfortable realities collide. First, oil prices crash again in 2014. Revenues shrink dramatically. Budget deficits widen. Second, the world begins talking seriously about climate change and energy transition, electric vehicles, renewable energy, net zero targets. For a country whose wealth is built on exporting hydrocarbons, this isn't just an environmental debate, it's an existential question. Enter Vision 2030. Crown Prince Mohammed bin Salman announces an ambitious plan to diversify the economy, reduce dependence on oil, expand tourism, entertainment, mining, technology, develop mega projects like Neom, a futuristic city planned in the desert. The strategy is bold and expensive. To fund it, Saudi Arabia leans on a new instrument, its Sovereign Wealth Fund, the Public Investment Fund, or PIF. Instead of simply holding foreign reserves passively, the kingdom begins investing aggressively. Tech companies, electric vehicles, sports franchises, infrastructure abroad. The logic is clear. If oil wealth built the foundation, financial investments could build the future. But here's the uncomfortable math. Even today, oil still accounts for the majority of government revenue and export earnings. Diversification is progressing. But slowly, non-oil sectors are growing, yet the fiscal backbone remains crude exports. It is like trying to renovate your house while still living in it and using money from the same room you trying to replace. There's another layer of irony. The global push toward green energy doesn't eliminate oil overnight. In fact, underinvestment in oil supply can tighten markets and push prices higher in the short term, which can make oil exporters richer. So the transition away from oil may temporarily increase the profits of those who produce it most efficiently. Saudi Arabia understands this dynamic well. It keeps production costs low. It maintains spare capacity. Through OPEC and its alliances, it influences global supply levels, not absolute control, but significant influence. That influence translates into pricing power, and pricing power translates into revenue. So how did Saudi Arabia get so rich? Because it discovered one of the largest pools of cheap, accessible oil in history. Because it nationalized and centralized control over that resource. Because it embedded itself in the dollar-based global financial system. Because it used oil revenue to build infrastructure, fund citizens, and accumulate foreign assets, and because it learned to survive cycles: boom, bust, boom again. But wealth built on a single commodity always carries risk. Oil demand may plateau, geopolitics may shift, technological breakthroughs may accelerate, or maybe oil remains essential longer than many expect. The skyscrapers of Riyadh and the trillion-dollar valuations tell one story of abundance and power. The budget sheets tell another of dependence and volatility. Saudi Arabia is not just rich because of oil, it is rich because it turned geology into a financial system. The real question now isn't how it got rich. It's whether the system that made it rich can survive the century ahead, because the desert hasn't changed, but the world around it has.